So I've just sent this pound Swissy trade idea into VIP, and what I want to do with this video is explain why I took this trade. I'll explain the strategy and you'll be able to treat this as a tutorial. Before I get into the video, I'm going to invite you to join our VIP for free. Okay, I have this offer going here. It's free for a month. So there's a free trial, no charge whatsoever. And there's a couple of options in there you can have a look at. Take up this 1 month trial and use the signals to pass your prop firm challenge. This is a great opportunity. Contact me by going to the contact link and let me know that you're taking up the 1 month complimentary VIP. I'll send you a PayPal link that will not bill you in the first month. Click the PayPal link. It'll be for the monthly subscription, but billing starts after 30 days. For whatever reason, if this isn't for you, you have the option to cancel the subscription at any time. So this is 100% risk-free. So I encourage you to jump on board and see what's possible with this incredible offer through January. So without further ado, we'll get into the pound Swissy video. Traders, I just sent this pound Swissy trade idea into my VIP group, and what I want to do with this video is explain the strategy. So we have these alerts going off over here in the alerts log. They fire and they give us these opportunities. We can see pound Swissy, 15M, also the 5 minute. Okay, so we've got these red dots on the 5 minute chart here that grabbed my attention, brought me into the charts. So what I want to do with the video is explain the strategy, give you my reasons for taking a trade, and you'll be able to treat this as a tutorial. Let's have a look at this quickly on the weekly. Have a look left here and you'll see this low coincides with the current high. The orange is weekly. So we've got this resistance level right here. Nice pullback, okay, strong bearish trend, retrace into resistance. I like it. Can it pull back further? Yes. That's the risk. We've got these lows over here as a point of interest, and then this high. So that's 3 levels that we need to mark up on the chart. We'll go down to the daily time frame to work our way down. We've got this marked up. We've got these 3 levels. Understand the risk involved. Have a look at this line. Well, first up, I like the angle, more or less a 45-degree angle. That's in our favor. We've got this balance area here. The low coincides with this weekly. So a pull back into here wouldn't be out of the question. That's why I have a fairly wide stop. Understand that smart money manipulates this market to their advantage. You know, they can get really aggressive and price it up into these levels, taking out stops before they drop it further. Be aware of that. Like, I mean, look at this, for example, here. Yeah, we've got this bearish trend here. We get that. Look what they do, though. This is a deliberate stop run, guys, above these highs, taking out liquidity. They work the markets and then capitalize. So we just got to consider what the big boys or girls, whoever they are, might be doing, and understand that they can get very aggressive. I mean, yeah, look at that move here. So, I mean, if we take a measured move, you know, they could trade way back up into these levels. So I've gone in with a smaller position size, understanding the risk involved. But I mean, I don't want to miss out on an opportunity. It's not FOMOing in, but I'm happy to jump in at the level that I have, given that we're trading into this here and it's a strong bearish trend. We'll go down the time frames. Quickly back on the daily. I want to show you this, and then we'll go down the time frames and we'll get a bit closer to it. If we scroll back here at the current price level, look and see what we've got here. See these lows and these wicks? There's a couple of things with this. The market is targeting liquidity for one thing, and it's looking to rebalance. So if we look at this from a liquidity standpoint, these lows over here are a potential target. If this is bearish, they're looking to take out sell-side liquidity under the previous lows, in my opinion. So with that in mind, that's the target. Then we'll just call it a liquidity target. I'm thinking that we get a trade down into these levels and possibly beyond. We'll see what happens. So we've got weekly levels marked up above resistance. We've got a target marked up below. And yeah, we'll go down now to the lower time frame. Oh, I will mark up this. This is this candle here. We've got this daily distribution level, just marking up the high and low of that green candle, potential target for a retrace. But let's see if it gets through this first. Now down to the 4H. You can see how it's trading under the cloud. Okay, 4 hour trading under the cloud as well. Nice bearish market. We've had one retrace and now quite an aggressive pullback, taking out the highs above these, the liquidity above these highs here. So I'm hoping that that's a stop run, giving them what they need to pair their orders short. So we'll have resting stops above here, liquidity pool directly above these equal highs here. Bang, they hit that. And hopefully this trades south. Understand the risk? Yes, it can trade further north. Now we've got this daily distribution nested 4 hour. I'm just going to pick up this green candle. So daily and 4 hour nested distribution level here. Big resistance. Have a look and see what we have with the indicators. Yellow line is a previous daily high or low. The indicators, the cloud you can see here, more often than not, this is going to avoid the cloud in a trend. At some stage it'll pull into it, but these levels are calculated off the average true range. These are variations of the average true range. They generally give us some pretty good levels to work with. As you can see, I mean, if we shorted it back up in here and avoided the cloud, we'd be trailing our stop loss down with the cloud here. So this pullback's quite a nice pullback into the mean on the 4H. So where this kicks off for a nice outcome. Now I do have my stop loss resting above here. Now we've got this yellow line, that's a daily. A previous daily high or low coincides with the dots. Stop loss up in here. Above the cloud if you want. Just go with the dots here. That's a good level for a stop. I want to go wide with this because I'm thinking that we could see a bit of manipulation early in the week. Entry point, we're slightly in profit at the moment. So it was just around this weekly low that we entered. Trend-based fib extension. This is my risk reward tool. And we just adjust that like so. Okay, there's your 2-to-1 risk reward here. I'm going to look to take 65% off at target 1. That's a great spot for a first target. So there's T1. 65% off at T1. Pull the stop loss down and see how we go. Now on the lower time frame, this blue zone is the ICT kill zone. I'm looking for the opportunity through this range or this zone, this time zone. Kicks off at 2 a.m. New York. This is the London Open here at 3 a.m. New York. And now it's just touching slightly before 5 a.m. New York. This is the Asia close right here. So this is the end of the kill zone. And what I love about this setup is there's a range. I'm reading that as a stop hunt. And now we are seeing displacement to the downside. We're already in this trade. Hopefully it trades in our favor. We get the retrace back to rebalance, and that's the outcome. Can this be an aggressive hunt for stops to the downside and they decide to take it further up? Of course, that's possible. Occasionally that will happen. But more often than not, this setup with the trend on higher time frame heading south with the range and a hit like that with displacement like this, more often than not works out in our favor. I give this an 80% probability is in our favor, but I love this. Look at this aggressive sell-off at the moment. The other thing you want to consider here also is within this ICT kill zone, I'm always looking for this to take out a previous daily or weekly high or low. See the level here? That's a weekly. And you can see here this is a previous daily high or low, or daily high actually. Right, so this range is a big level, previous weekly low, and daily, it takes out liquidity above a previous daily higher time frame level. So we've got a lot of factors in our favor with this. You know, you've got to build an argument, pros and cons, and there are so many check boxes. We've got a fair few check boxes in our favor, and there's a handful of check boxes that are not in our favor, right, given that this is overextended bearish and it could pull back a little bit higher. Anyway, guys, don't want to ramble on too much, but you know, I'm just basically voicing my thoughts, explaining why I took this trade. And the other thing you want to make sure you don't go in with a big lot sizes, okay, small position size. I wound back my position size on this one. I have a wide stop, so I think this has got a fairly good chance. And generally, in a ranging market, when it starts to flatten out, when we get a red dot, it usually works out in our favor. Look at this green dot down here. Whenever we see these dots on the hourly time frame, especially into these session times, they tend to work out. Look at this one here. Okay, it's ranging, we get the red dot, that's a stop run, and then look at the outcome. Bearish market, ignore the green, and we look for bearish signals. So any red dot is worth noting. Okay, with that, I hope you have a great day. Safe trading. See you in the next one.